What's going on, traders? John with Tactical Trading here. I just wanted to do a quick update, and then I'm actually going to go over two of my patterns and kind of describe them to you. With my therapy, with my broken knee, it's very difficult for me to make a lot of videos to day trade. Concentrate on going to therapy, making the phone calls, and dealing with everybody with with the workman's comp, trying to build this little pest control business that I have. I've got a lot of stuff going on. And it's kind of just accumulating to make it very difficult. I know I did an update on my trade challenge that I said I was doing, the $1,000 trade challenge, and first week I got my butt kicked in. I think I left off on SHMP when I made that trade. I said I got killed on it. I ended up losing 261 on that, but I'm actually just going to go over it really quickly, just to do a quick recap of what we did on this challenge. My first trade on Monday the 10th, I bought RSSV, bought 5,000 shares at 20, just a shade under 21, 20.9 cents. Sold 5,000 shares at 20 cents. I lost $70 on that. The overnight hold was GAXY. I bought 35,000 shares at 2.5 cents. Sold 35,000 shares at shade under 3 cents for $140 profit. Then I bought RLFTF. Bought that on the morning panic dip buy on Tuesday morning. I bought that at 49.5 cents. Sold out at 53 cents for about a $72 profit. And then I bought the SHMP. I bought that at 11 cents. Got crushed. It did bounce back up the following morning, so I did a little better on that. And I sold that at 8.5 cents for a $250 loss. The next day, next night that I sold SHMP, I bought OPTI. I bought them at 10.5 cents, and then ended up having to sell out at about a shade over 9 cents for a $135 loss. And then RVVTF, TOMZ, that was on the dip buy when they had the earnings release. I bought that at $1.35, ended up selling at $1.25. And I actually did a couple dip buys from my other account, which is my larger account, so I buy there first and then I go here, so it kind of screwed me up on that, but I had to take the cut because I didn't know how low it was going to go. I ended up losing $136 on the OPTI trade and $70 on the TOMZ trade, and then I traded RVVTF for basically break even. I just lost the commissions on that because with TD Ameritrade you have to pay $7 per trade on a OTC pick. I ended up losing about $18.75 with commissions. Bought it at 23.5, sold it at 23. Nothing. It was a horrible week. I had a $485 losing streak on a $1,000 account with a total loss of $347 for the week. And then I ended up buying TPTW on Friday night, or Friday before the close. I bought them at about 7 cents, and then ended up selling, that was 8,000 shares, and then ended up selling the 8,000 shares at 8 cents. So I made a half a penny on that with commissions, didn't make very much on that. So the account was, let's see, the account was at like 673 and some change. The following week, I was very cautious on how I was making trades. I only made 3 trades this week. First trade was actually on Tuesday. Monday I didn't make a trade. I bought GRNQ, and that was on the 18th. I bought 500 shares at $1.71 and ended up selling 500 shares at $2.06 for a $175 profit. I didn't trade the following day, and then the next day I bought GEVO, bought 1,000 shares at 88 cents, and ended up selling 1,000 shares at $1.58. And then the following day I traded HJLI. That was buying 1,500 shares at 41 cents, which is this morning, and then sold the 1,500 shares at 66 cents. So that accumulated to a total of a $12.50 profit, with the losses the prior week. The account's sitting at about 18 and change, so almost doubled the account in less than a week. So that's just the update on that. What I want to do going forward is call out right after I make the trades, and I just want to remind you, I am not going, these are not trades that I want you to follow, because you're going to be in after the fact. You will be actually 5-10 minutes behind me with me uploading the video and everything like that. So these are not trades I want you to follow, but I do want to update you when I make the moves. It's just with therapy and everything, I've been behind so much. So kind of successful on that. I mean, sometimes the less you trade, the better off you are. And I got really lucky this week with three supernovas this week that actually exploded. They were very, very easy to trade, very easy to predict, all low flow plays, all had very low price, and all had some excellent momentum on them. So these were all three, and what they were, I know I'm only trading 3 patterns, but these are kind of the gap and go pattern. And I know I wasn't initially using the gap and go, but when you get plays like this, you have to take them. But what I want to do is, the main topic of this video is basically describing my 2 patterns that I like to use. And these are for people that are under the PDT rule and do not have a lot of capital and need to be very cautious with your trades. Now remember, when you have 3 day trades in a week, you almost want to save those day trades for losses. You want to save those day trades for when you have to cut and get out of a trade. You never want to be stuck in a trade and have to hold it overnight and just watch that sucker tear your account apart. Never want to do that. So obviously this week I didn't hold anything overnight. I had the stock that I called out today, Totos Medical, and that didn't pan out the way I thought it was. I called it out about 17 cents, and I was watching it for a first green day, and it just didn't pan out. From the minute I called it out, this thing just sunk like a rock all the way down into the 11s, popped back up on the close. I'm still going to be watching that one very, very closely next week because, believe it or not, I have a feeling that stock's going to jump and run next week. It was trading kind of fishy. I was watching literally 350,000 shares on the bid side get gobbled up in seconds. 200,000 shares on the bid side just get gobbled up in seconds. I looked on their website. I didn't see anything with any offerings or public offerings or company dilution of the shares, but it looked like something like that was happening because it looked like any time the stock got some momentum, pressure just came, chewed up the bids. It looked like the bids were getting hit and the offers were getting hit very little. I watched that trade very closely, or watched that stock very closely for an entry point, and I was still thinking about buying it because of how it got beat down on the close today, but I didn't do that. I said, you know what, this thing did not close strong. It's not setting up for my pattern. Yeah, it was a green day, but it didn't close with any strength. It didn't close anywhere near its highs, so it was something I kind of left alone. I will be watching it very closely next week because with that news that company got, Totos Medical got some terrific news. They're almost not even making much of a profit, and this company got a $6 million contract. $1 million a month for the next 6 months is huge for that company, and the fact that they're in the election infection business with this testing, you look at some of the companies. Obviously they're not one of the major players, but they have a focus and a goal of getting into every military base in the country. They're also in Israel. They're in other countries as well too. I don't know. I think next week, there's a few stocks that have been trading kind of funny. OPTI has been trading kind of funny. RBVTF has been trading kind of funny, and as well as Totos Medical. All of them trading kind of unusual. Where, and I don't know if it's just because it's the summertime, and right now school's starting. A lot of traders might be right before school. Traders are taking their children on vacation. A lot of people are taking that end of the summer break. I anticipate the fall it starts to turn around a little bit, but some of these OTC stocks have not been behaving as I typically see them behave over the last 2 weeks, 2.5, 3 weeks maybe. So I'm going to be very cautious with OTCs. In fact, I didn't trade any OTCs this week. I was looking at quite a few of them, but I couldn't pull the trigger on any of them. In fact, all the 3 trades that I played this week were all listed plays. All low float NASDAQs, runners. So that seems to be the plays this week. I wouldn't dare hold one of those stocks overnight. Look what GEVO did yesterday. I mean, that stock, I was like, man, I should have held that overnight. Look how strong it was, and it just closed strong. I mean, it had a dip and then just ran up in the after hours and closed very strong. And what they do at 4 a.m. had a public offering and crushed the stock 60, 70 cents on, right before people can even had a chance to get out. They woke up in the morning and they're down 50, 60 cents on the stock. So I mean, can you imagine buying that late in the after hours? This is why I really hesitate. When I use my first green day, I like doing OTC plays because I really hesitate holding NASDAQ stocks overnight, especially ones that haven't ran in a while and they have that first strong green day. A lot of times they do that public offering the next day to raise funds, and it just destroys them. It just crushes them. I mean, look at what is it? Is it DGLY or DLGY? The company that does the body cams. I think they did 2 or 3 public offerings while they had that huge run just a couple months back when the riots in Minnesota happened, and I mean, the stock still went strong. I mean, I think it went from about $1 up to $7. But, every time they'd get some huge momentum, they just tap it down with an offering, crash, and then come back. Boom, another offering, crash, and come back. And that's the thing that scares me about these penny stocks. And this is why I stress to you guys, a lot of these stocks are not investments. Yeah, you'll find a diamond in the rough. And yeah, a lot of these stocks that are $100 now, $1,000 now, started at $1, started at $2, started at $5. They got to start somewhere. And it's just, I've been in this game long enough where I have a hard time believing these companies. I have a hard time believing in their technology. A very few and far between I'll see a stock like OPTI. I don't think they have the greatest products in the world, but I think they have the right products for the right time. I also was doing some research that they've been doing a little bit of dilution. Their share float is much higher than I thought it was. If you look on TD Ameritrade, if you look on OTC markets, their float says it's under 10 million float. That's not the case. They have a much higher float than that. So that actually kind of it kind of dabs me a little bit on that, because I was a stock with that float, and I was looking how it's trading. I'm like, man, this can't be. This can't be. You can't have a stock with 10 million float and have 450,000 share offers coming in. It's just not possible, because stocks like this typically don't have institutional investors. They typically don't have the big boys playing these stocks. So with that, who has those large blocks or those large chunks to throw in here? To me, it looks like the company was throwing some shares out there as dilution to earn, to raise capital for expansion, which is not a bad thing at most times. But when you dilute the shares, you're going to have a hard time getting a run on them. Now, I'm still positive on OPTI. I still think that, who knows? This Sunday they may, I was thinking about buying that stock at the end of the day and holding it just for, just by chance that they have that on Fox News, that Kevin Harrington, who has that show where he's interviewing 5 exciting stocks. But what if it's OPTI? He didn't say who it was, but he put a tweet out a couple days ago that on Sunday at 5 p.m. Eastern, he's going to be on Fox Business and he'll be interviewing 5 channels. I have a sneaky suspicion that Kronos Technologies and OPTI might be 2 of the 5 companies. So, but that's speculation. So, the way I'm kind of playing this now, after I got my butt kicked last week, I had a nice week this week. There's no time for speculation. You just gotta let the market. You gotta play and react to the market. Don't try to anticipate. Don't try to guess. You just react. Get what the market takes you and walk off with it. Don't try to pull and extract out of the market. That's not the way to go right now, especially at this time. Now, when the market's super hot, you can do that, but the market's cooling off a little bit right now, and I think it'll heat up back in the fall, but that's to be seen. So, obviously, we're still in the hottest market possibly that I've ever seen in my life, and I've been around this game quite some time. But you got to be careful, and like I always say, stick to your rules. And when you stick to your rules, good things happen. So, what I like to do, talk to you about, is 2 patterns, and I know I rambled on for almost 15 minutes, but I did want to give an update on the challenge as well too. The first pattern that I want to talk about is the dip and rip pattern. Now, I know I've spoke on this pattern before. I know I kind of went into a description on this pattern, but this dip and rip can be played two ways. And what I'm going to be talking about is the way to play it, like if you're looking at an early morning NASDAQ runner. And then I'll describe it the other way. But the criteria you're looking for is this: is number one, you're looking for a low float stock. You want a stock that has under 15 million available shares, 15 million afloat. And you can go on FinViz. It's a terrific free scanner that now has the criteria of float and shares available on the actual screener. So you can go through and actually find out how many shares are available and do the screening that way. FinViz, if you go on the top tabs, they have all, you click all their tabs come out. I usually go under $6 for the price. The relative volume, I go over 2, and then I go under 20 million shares outstanding and under 10 million float, and that's usually where I generate a list. And then I just click the tab on change, which is the percentage change that the stock has. I click it twice, because when you click it the first time, it goes from losers to winners. You click it again, it goes from winners to losers, so that you have your highest percentage winners. And that way it gives you a little list of stocks to actually keep an eye on or to look at if you need a free scanner. But you look for a low float play. This play, number 2, has to have news. And I will be going over some of the the key things to look at when you're looking at a stock, and what's the best news. Rating the news actually from bad news, mediocre news, to really good news. But it's got to be low float, under 15 million shares. This guy has to have news. This stock has to have news. I prefer the stock to be in a hot sector. Doesn't necessarily have to be in the hot sector, but I mean, you always look at vaccine plays. You look at at-home plays, like at-home schooling, at-home gambling, at-home, anything at home right now is a hot sector. You look. I mean, we've had a hot marijuana sector a few years back. We've had, police cameras got hot for a little bit, and stuff like that. You got to start to know what the hot sector is. Back when Ebola, we had the same thing. Same type of stocks were getting hot. So I prefer a hot sector, but this is not a necessity. But this stock has to be up big pre-market. I need the stock up at least 40 to 50% pre-market. We don't need anything under 40 or 50% in the pre-market. What you want for this stock is for it to open weak. And what this does is this sucks in the shorts. When you get a long wick a green candle with a long wick, and then you get a red candle afterwards, and it starts trending down a little bit, the shorts pile in. They just pile in. And you want this to open weak, because you want the shorts, because you're looking for a short squeeze a little bit later on. The stock you're really looking for, in criteria that I look for, the best runners are typically $1 to $10. I look for between $1 and $6, but this pattern does work really well with stocks between $1 and $10. What I like might not be what somebody else likes. Somebody might like to trade stocks between $5 and $10. They typically $10 and under are the best stocks to trade, and over $1 for this pattern. So between $1 and $10 is the preferable range. For me, it's about $1 to $6. And you want to see about 2 to 3 million shares traded by 8 a.m. Central Time, 9 a.m. Eastern Time. You want to see about 2 to 3 million shares traded in that amount of time. You want to see eyes on the stock. You don't want it. It doesn't matter really. Sometimes the more the better, but sometimes you don't want to get an overcrowded stock that has 20, 30 million shares before the open, but sometimes those work. So again, I'll go over it. We want, number one, a low float under 15 million shares. This stock has to have news, good news. Prefer it to be in a hot sector as well. That always helps. We want this thing up big pre-market, up at least 40% to 50%. We want this thing to open weak. We want this thing to dip weak towards VWAP. And what this does is it sucks in the short players. And then you want it to be between $1 and $10. In my opinion, I like it between $1 and $6, but it works really well between $1 and $10. And you want this thing to have traded between 2 and 3 million shares by 8 a.m. Central Time, 9 a.m. Eastern Time. What you want to do then, as this thing opens weak, you want this thing to hug VWAP. It can be a little below, above VWAP is preferable, but it can be a little below VWAP as long as it's hugging VWAP. And then when this thing starts curling up, you got to remember and take a good look at the high of the day, the pre-market high, because when that thing starts nearing the pre-market high, you got to be ready to buy, because when it cracks the pre-market high, you have to be in 1 penny to 5 pennies right above that pre-market high. Once that thing breaks the pre-market high, you know you can rip. What you do is you set your your stop loss, set a mental stop loss, however much you want to lose. Maybe you take a look. 10 cents maybe is your stop loss, depending on the price of the stock. Maybe it's 10%. But you want to make sure you got at least a 2-to-1 risk reward on this. So if you're risking 10 cents, you want to make 20 cents on the stock. Sometimes these stocks run even more, but you never want to be greedy as well too, because you never know what can happen with these stocks. Once you get your 20%, you bag it. You take that bag and run. I know with the 3 trades I had this week, I got really lucky, and I was really patient, because typically I grab the bag and I run, and then I go say, I'll get back in. But that's with my other account. When I'm with my in this challenge account, I'm under the PDT. I can't do that, so I have to be very, very patient. Now on my other account, the 3 stocks that I traded this week, I traded them quite a bit. I mean, I think I made 2 or 3 trades on each of those. Let's take a look here. On GRNQ, I made 2 trades. No, GRNQ I made 3 trades. GEVO, I made 2 trades, and then HJLI I made 2 trades. So that's 7 trades right there. In where in this account I can only make 3 trades, 1 in each, 1 in each stock. So I really had no choice with that. So, but that's the dip and rip pattern. That's a pattern you really want to get familiar with. This is a great pattern for early morning NASDAQ runners. I don't really use this too much with OTC stocks. The way I use this with OTC stocks and also NASDAQ is if it breaks up and doesn't have that weak open, it busts through the open, and then it starts to pull back later in the day, 9:30, 10:30, it starts to pull back, hugs VWAP and just rides the rest of the day. And then later in the day, later in the afternoon, it has that that VWAP hold and breaks the high later in the day. Sometimes you can hold those overnight because they ended up finishing strong, stay strong, especially with OTCs. If they do that, they end the day strong. Those can end up a nice overnight hold to sell into the strength in the morning, the following day. Or I mean, if you get enough on that run, and just take your bag and run home. The other play that I like to talk about, and the other pattern, is the first green day. And this is what I was talking about today with Totos Medical. I was looking for this first green day to set up for a pattern, and it just didn't come to fruition. I like an OTC stock that is up for the first time in maybe a week or so minimum. I mean, it could be a week, it could be a month, it actually could be 4 or 5 days. I mean, if you're seeing small, little, tiny green candles mixed in with red candles, and you're looking on the daily chart, you're looking on the annual 1-year daily chart, each candle representing 1 day. What you're looking for is this stock. It has to be the first green day in maybe a week, and it could be even longer. I mean, if it's 3 or 4 days, it usually doesn't work as well. But like I said, a small green day up 8%, that doesn't count. We need the stock to be up 40% or better. We need this thing to be, and sometimes you'd like it even up to even more, 50, 60, 70, 100, 120%. That shows that this stock has momentum and it has steam. The relative volume on the stock must be at least 2 or 3 to 1, and it must be over 2 or over 3. You want this thing to trade 2 or 3 times, preferably the more the better, times it normally trades. So if the stock trades 1 million shares a day, you want this thing to trade 3 million shares that day, 5 million shares, sometimes 10 million shares. The more the better. You want as many eyes as you possibly can on this stock. This stock must have news. It can't be up on nothing. This stock must have news. You can play it without news, but I find if you back test this, usually without news, this might work 55, 60% of the time. With news, this thing usually works closer to 83, 84% of the time. Now the main thing is this stock must close within somewhere near its highs, and it must close strong. Now a little pullback on the close doesn't mean a darn thing. That's not a big deal. You could just get some late selling. But if the stock, if the stocks opened the day, and it didn't gap up, it just opened up. Let's say it opened up at 5 cents, and this thing ran all the way up to 13 cents. You want this thing to close between 10 and 13 cents. You don't want it to drop all the way back down to 5, 6, 7 cents. That's not a strong close. You want this thing to close within 10% of its highs. Usually the closer the better. And you also want it to close strong. You want this thing to be trending and grinding upwards. And with the good news, typically what happens is when that thing closes, the OTC stocks are they're not as followed as these bigger stocks. You get people that see, why was this stock up 85% today? They look, they see the news, oh man, they got to deal with this person, they got to deal with that, or they sold X amount of this, X amount of that. They see that news, and because the OTC does not trade after hours, and they trade very, very, very sparsely, and most platforms will not even let you put in a pre-market OTC trade. People go to buy, they want to buy in the open, so they stack orders, stack orders, stack orders, and those buy orders just stack up, and they can't be executed until the open, and that's where you get your gap up, and you sell into that strength. So that's what you're looking for on the first green day. And you don't want to hold it too long. Sometimes they'll gap up and then run a little bit, but that's where you sell it. You want to sell into the strength. So again, first off, you want to see a stock, that OTC stock that is up for the first time in about a week, if not more, and you want this stock to be up 40% or better. This must have 2 to 3 to 1 or over 2 or 3 relative volume. So again, if it trades 1 million shares a week, or 1 million shares a day, you want this thing to be trading 2, 3, 4, 5, 6 million shares that day. A lot of volume. It has to have good news, and it must close within 10% of its highs, 8% of its highs. I mean, if it's 12%, it's fine, but you want it to close around 10% from its highs, if not better. And that is the first green day. You wait till the next day, you get that momentum, you get those latecomers that think they're, hey, we're getting on the stock. They come in, put their buy orders in, it pushes the stock up for a gap up, it pushes it up for a little run on the open, and you sell into that strength. And that's your first green day. I appreciate you guys watching. I'm just trying to help you guys, kind of understand what I'm looking at when I'm doing these trades and how I'm making my trades. If you have any questions, please leave them in the comments below. As always, please like, share, and subscribe. And I will be coming out with a couple of pick videos, like I told y'all, but I'm actually probably going to be making some immediately after this and putting them out. So keep an eye out for that, guys. I appreciate you watching. You guys have a great day. Be blessed, and let's get that money, traders.